Hello, good afternoon. 12/5/2012. I have a weekly chart on Google. One of the things that I would like to say is that this name is going to be much stronger as we get into Google's rollout with the Nexus. The Androids are taking market share away. Lots of great things are happening. And we rallied off of the last lows here when we got overbought. This is that 775 area. And we came down here and made these lows here. And here's where the lows were on Google. Now, those lows were $636 right here. We rallied up to this high right here to 699 on that bar. This was the peak of it at 705.89 in this weekly bar. That was that first time. Then we went up here. The thing that in a shorter term is that yes, you would want to buy the dips. Why could Google trade down a little bit lower? But why would Google be the bright spot that Apple once was? Is because right now that 10-week, this is that blue line, it's about to cross over that 20-week. Yes, the 20-week is still rising. That's why the pullbacks are buyable on the call side, because they make a lot of money. What we would like to see here is how Google, during any fiscal cliff or any sell downs, is that Google, once again, on the weekly level, one of the things I'd like to point out is that when we were over here, we were at 33%. That's a percent DS reading. When we were up here at the highs, we were so overbought that this thing was at 96.22. That's when we called to get short. And then it would have its intraday ranges. I would say right now that we're at 35% DS. We were at 30 the other day. The lower that this goes, the more oversold that it will get. However, the cautionary part is that the 10-week is starting to slope down. And if it crosses over the red line, that's the 20-week at 689, and the 10-week is at 692. Therefore, this name right here had a range today. It closed at 691. It makes the low 682.33. From there, we had Mr. Obama out on the news wires, and when we got down here, everyone liked what they heard out of his speech with the roundtable speech, and we went from 682 right back up to 694.50, and we made a high. The options that were traded, which was a $700 put, had closed at 1050. They put the low in at 851, and then they run them up to 1780 on the high. They pulled them back intraday when we were making the highs here on Google. They pulled these very same contracts right back to $9.50. On the flip side, when we take a look at the call side, the 685 call, they closed at 920. They took them up on the open there. They got up to 1120. They made the low of $4 on the 685 call. The call side gets marked down $5 as it did. Then they were buyable. That's on the 685 call. One thing that we will be very cautious of with it is that as we pull back, if we cross over the 20-week, that means that the wall of resistance is going to be much stronger, and that we would trade within the volatility. It was only down $3 today from that close, but nonetheless, why does resistance become stronger? It's because when you have these rollovers, called crossovers on weeklies, the upper end of the resistance is going to be strong, and that's when we'll look at making our engagements and trading the put side. When they come down and hit their major support level on an intraday level, the calls are inflated, but the calls have great trades off the bottom as well. The major cautionary thing about this trend is that for the first time within the market volatility and the fiscal cliff and all the stuff that's going on in Congress and everything else is that the weekly indicators are changing, and the bigger money will look at that. But remember, that any dip during the earnings season in January, or any fiscal cliff, or any big markdown with an earnings report, this is going to be the name that's going to have the bright spot because of their rollout. Their ecosystem is getting larger and larger and larger, and they're going to give Apple a run for their money. And they're already taking market share from them. So, once again, the great bellwether here, as it was, the new bellwether here, by taking market share in calendar 2013, when we sell down and we make it show what the quarter is on January 17th of 2013, we got a sell signal here when that 10-week crosses over the 20. It's going in the wrong direction. When you have bull rallies with weekly moving averages, this blue line crosses above the 20 like this, and this is where you get the great rallies. When they start to go the opposite way and cross over, whether it's on a weekly, daily, 60-minute chart, 15-minute chart, it doesn't matter. What matters is how do I define where the wall of resistance is going to hold and why I would be selling short and buying the put side, but then when it gets down on the lower end is where I buy the calls. Be very cautionary right now of this name from a technical level. From a fundamental level, well, we have yet to get confirmation in that. We won't know until January 17th. We will be buyers on the dips. Because, once again, this name here, Apple, is that money that was in here. And today's money flow is only negative $73 million on Apple. If you take a look at the negative money flow on Google, it's only 73 million. On Apple, it's over $1 billion right here. $1 billion worth of selling. And the people that didn't get out up at the highs started to sell down. This is a big haircut. If you own it, like we said when this thing was going to rally up off of its lows, if you didn't get out, you needed to get out of it before this event happened. We were very clear about that on our updates that we've given. So once again, where does money go from here? Eventually find its home in Google, as it will. Right now, though, it's technically bearish from a technical level, a technical reading only, not from a fundamentals. And if they can monetize the mobile app correctly, that means that next pay per click in mobile, once that happens, this is going to be a bright spot. And they're trying to get that. They're working on that, on how to get that pay per click on these smartphones and all these mobile apps. Once again, that's the technical part. It's bearish because of the declining weekly. We rallied up 2 weeks to major resistance, and now we're giving back some gain. And we hit that first low. What we'll look for tomorrow is a lower high than 694 within the volatility. However, it's important to understand how to trade Google. I'm updating it technically. It's bearish technically because the 10-week is going the wrong way. Beware that you don't want to get caught in this thing when this starts to happen. And like I say, it just now started. So, we will get oversold again, just as we were overbought. And when it does get oversold, that's the time to try to buy the calls and get a 5-day up or a 10-day up move. But right now it's bearish on Google.